This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Chinese coal traders say they are scrambling for price information on spot transactions, relying on personal communications as Beijing steps up scrutiny amid efforts to tame prices. The country's top economic planner, the National Development and Reform Commission, said this week it would investigate coal and energy index providers over spreading fabricated price information. The agency is also studying a new mechanism to guide coal prices within a reasonable range over the long term. The heightened scrutiny adds strains to the Chinese coal trading community, which is already struggling to keep up with rapid market and regulatory changes in the world's top coal consumer.
Top U.S. oil firms are doubling down on drilling, deepening a divide with European rivals on the outlook for renewables, and winning support from big investors who do not expect the stateside companies to invest in wind and solar. Among a dozen U.S. fund managers contacted by Reuters from companies overseeing about $7 trillion in assets, most said they prefer oil firms to generate returns from businesses they know best and give shareholders cash to make their own renewable bets. With oil and gas prices jumping this year, the U.S. oil majors mostly have delivered higher returns and achieved better earnings multiples and dividend yields than rivals, cementing shareholder enthusiasm.
Moving on to the top news in the energy sector.
The International Energy Agency, IEA, and International Renewable Energy Agency, IRENA, on Wednesday called for a massive scale-up in clean energy projects and policies at the upcoming UN COP26 climate summit as a buffer against volatile prices. The call from world's top energy agencies come after the United Nations warned this week that updated pledges to reduce emissions fell short and COP26 could be the last chance to curb global warming. We are sitting in a very narrow window. So, this is really the decade where you want to see a strong foundation of actions being focused upon, so that we are actually on track to reach net zero by the mid-century, Gauri Singh, IRENA's Deputy Director General told Reuters.
Crude oil tanks at the Cushing, Oklahoma storage hub are more depleted than they have been in the last 3 years, and prices of further dated oil contracts suggest they will stay lower for months. U.S. demand for crude among refiners making gasoline and diesel has surged as the economy has recovered from the worst of the pandemic. Demand across the globe means other countries have looked to the United States for crude barrels, also boosting draws out of Cushing. Analysts expect the draw on inventories to continue in the short term, which could further boost U.S. crude prices that have already climbed by about 25% in the last 2 months. The discount on U.S. crude futures to the international Brent benchmark should stay narrow. Next, we have the top news in metal markets. Copper prices are due to extend their decline next year from record levels touched in 2021 as mine supply ramps up and economic growth tapers in top market China, a Reuters poll found. Benchmark copper soared to a record peak of $10,747.50 a ton in May, but has retreated about 10% since then, weighed down by weak Chinese factory output, debt problems in the property market and an energy crunch. Bearish macro drivers will dominate the copper market next year. A slowdown in Chinese growth and rising mine supply, UK independent analyst Robin Barr said.
Aluminium dropped to its lowest in nearly 8 weeks on Wednesday as declining thermal coal prices eased supply concerns. Coal prices slumped to their lowest in more than a month, hitting its daily 10% loss limit, after China's state planner asked major coal-producing provinces to investigate and regulate illegal storage sites and to crack down on hoarding. Aluminium smelting is energy-intensive and up to 40% of the metal's production costs in China could be accounted for by power.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures fell on Wednesday, after 2 consecutive sessions of gains, hurt by a new wave of COVID-19 infections in China and cheaper rival oils elsewhere. The benchmark palm oil contract for January delivery on the Bursa Malaysia Derivatives Exchange closed 1% lower at 4,962 ringgit, $1,196.24 per ton, after having gained 1.8% over the previous 2 sessions. Palm prices were weighed by losses by rival oils on the Dalian Commodity Exchange and the Chicago Board of Trade, CBOT, as well as crude oil, Anil Kumar Bagani, head of research at the Mumbai-based vegetable broker Sunvan Group said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.